All right, so we're the Cola Guys. I'm David.
I'm George.
And we're here with Candice Bray, our good friend today that we are involved with throughout the Irmo community. She is a mortgage broker with Guild Mortgage.
Yes.
So welcome, Candice.
Thank you guys for having
Yes,
me.
ma'am.
So today, we really want to talk about the one thing that seems to be very important to a lot of people buying real estate, which is mortgages.
Yeah.
So, but before we dive into that topic, introduce yourself to us and, who you
Great.
are, what you do, and
So I'm Candice Bray. I am a mortgage loan originator or a mortgage broker with Guild Mortgage. I've been with Guild for about 4 years, but in that 4 years, on the sales side, mortgage side of things for about 2.5
Yeah.
of those 4. But anyway, I born and raised here in Columbia, South Carolina.
Awesome.
Went to Columbia College. No one goes to school to be a mortgage originator at all. It's just something that you fall into. But honestly, it was probably the best decision I ever made, and you get to help people achieve that American dream. So it's been
Awesome.
great.
All right, we'll start off with the basics then.
Sure.
What do you do as you work as a mortgage broker?
So as a mortgage loan originator, I would say my primary job is to look after the borrower and take them through the whole home buying process, from the application all the way to closing and handing them over those keys. It's pretty much to be their main point of contact and answer any of the questions they may have and kind of take the mystery out of the mortgage process.
Yeah.
For sure.
Yeah, so, and a lot of times people, especially with first-time home buyers, because we work with first-time home buyers quite a bit.
Sure.
We're trying to, put some value out there and, education-wise for first-time home buyers. And then they get to that point where they're ready to buy a home, but like, oh God, here I go, I've got to get a mortgage. And, they call you for that first time. What do you tell somebody that's calling that mortgage loan originator for the first time, is with some good advice about how to get started,
Honestly, just to get started, obviously I know it sounds so silly, but start with that application. Fill the application out as thoroughly as you can, and then we'll look at it. We'll pull your credit, which I know everyone gets nervous about, but it allows us to kind of see the full picture and to kind of see if there are any areas that we need to work on, or if we're ready to go ahead and get pre-qualified, need to buy that house tomorrow. But honestly, it's just give us a call, let's go through everything, let's talk through any of your questions you may have, and then kind of work backwards from there.
So it's kind of like going to the doctor to get a checkup, right?
1,000%. Yeah, let's see where we are. Let's see what we need to work on or see how great of shape we're in.
Yeah.
Especially for like first-time home buyers though, who are doing it for the first time.
Yeah.
They might have gotten like a car loan before, but this is their first time getting a mortgage.
Right.
What should they expect to be different out of applying for the mortgage rather than applying for a different type of loan?
It's a great question. So mortgages are definitely going to be a little bit more of a strenuous approval system. We're going to take your application just as you would for that car loan, but we're also going to require a lot more information, like 60 days worth of bank statements, 2 months worth of pay stubs. We're going to get really close very quickly, and we're going to find out like every single thing what's going on in your world that probably would not happen if you're buying a car. But one thing that's kind of different from buying a car and a mortgage is you could put a down payment down for a car, but typically for a mortgage it's always required for the most part. So definitely a few differences with those.
And we'll come back to the down payment part,
Sure.
because that's always a huge question for people that are buying homes, is how much money do I need to give up
Yeah.
at first. But, what can you use a mortgage to buy?
So a mortgage is used to purchase your real estate, like a dwelling. It has to have a dwelling on the property that you live in. So single family residence homes, probably the most popular that we all typically live in, but condos, townhomes, modular homes, and even mobile homes. Absolutely we can look at doing a mortgage on either of those, and different programs do have different requirements or may not necessarily lend on certain properties. Like VA, for instance, they don't do mobile homes, but that doesn't mean that you couldn't do it with an FHA mortgage, you know?
Awesome. And so there are all these kind of alternative living structures that are coming
Yeah.
up, barn dominiums, tiny homes. Can you get a mortgage for those?
You sure
or-
can, but there are some different like caveats when it comes to those type
Okay.
of dwellings. But yes, if you can inhabit that dwelling and live there, then you can get a mortgage on it for the most part. So
Awesome.
yes, there's just
Okay.
going to be a few red tape items if there are wills connected to that tiny home or something. It's going to have,
Yeah.
that kind of stuff.
So, somebody approaches George and I and says, "Hey, we want to go buy a home." In this crazy market that we're in these days, really the first question we ask is, have you been pre-approved or pre-qualified or
Sure.
even talked with a lender or a loan originator? And a lot of times the answer is no.
Sure. Yeah.
So what would you tell somebody that's thinking about buying a home for the first time or getting ready to go buy a home? When do you kick in, or when do they need to start talking with you?
David, honestly, ideally, I should be the first point of contact.
Okay.
I think that it makes most sense for you, before you start getting on Zillow and looking at houses and falling in love with that house, let's take the emotion out of it. Let's just go ahead and see what our numbers are and get ahead of it and see what your price point is. The worst thing is that you get emotionally connected to a home and then you realize you don't qualify for it. So let's see what we qualify for, what we need to make this happen, and then go out there and start looking at houses, and you're going to be such a more confident buyer, and it'll make the transaction a lot easier and a lot smoother.
So
Yeah.
talking
Less
about
emotions.
the pre-qualification and
Yeah.
everything, what would you tell the home buyer is important of getting pre-qualified and then pre-approved? What's the difference that they need to know?
Yeah,
when
so
they're getting
especially
prepared?
in this market, with it just being kind of tough to go under contract and get your contract accepted, or your offer accepted, a pre-qualification, we're pretty much taking the borrower's word for it. So whatever they put on that application, we're going to question it a little bit and ask them, but we're going to take their word for it for the most part. So when you hear someone stating, let's get pre-approved, I'm sure you guys preach this to your clients. It's just, it gives you a stronger offer because it means you've submitted those income and asset documents and they've been verified, most likely by an underwriter. So you're a stronger offer, and most likely you're going to get your offer accepted versus a pre-qualification. So it's worth sending in those docs, having them reviewed, getting pre-approved.
Yes,
Yeah.
ma'am.
So how organized should I be when I come to you?
You don't have to be very organized. Just I need your social, I need your date of birth, and your legal name.
Okay.
Everything else we can kind of figure it out and see what we need to kind of fill in any blanks.
So
But
you don't need that shoebox where I've thrown my tax returns
Please
or
don't bring the
employment
shoebox.
stubs
Yeah.
or anything like that.
no, just usually, honestly, documentation, 2 months worth of bank statements, 2 most recent pay stubs, and if you're going to pull money out of a 401k or if you're going to have gifted funds, we're going to need a little bit of other information for that, but typically income, asset docs, and of course we're going to pull your credit.
Yeah. Okay.
So I'm looking to buy the first home as a home buyer, let's say, but I don't know which type of loan I need. How do you help people figure out what type of mortgage that will suit them best?
You nailed it. I'm going to help you with that. You're going to fill out the application, and then we're going to see what products and loan programs that you qualify for. And you typically fall into one of 5 buckets, which we can go over. But it's really just kind of what options are available to you, and your trusted loan advisor is going to help guide you through each of those scenarios and seeing what makes sense for you and for your unique situation.
Awesome.
And so just for our audience, what are some of those different types of products?
So tons of products, tons of loan programs, but you're probably going to fall into one of 5 buckets.
Yeah.
Conventional, FHA, VA, USDA, and jumbo. And jumbo just pretty much means if you're buying a home and that loan amount is over $647,200, it's going to be considered a jumbo loan. Most of us are not going to quite buy a house in this area for that amount. But one of those 5 categories is probably where you're going to land in your loan.
And so conventional loans, that's just your standard mortgage product that's out there that I think a lot of us think about. But talk a little bit about an FHA loan, a USDA loan, VA loan. What are the nuances of those for folks?
Sure. So FHA is government backed, and it's a great program. It allows for a higher debt to income ratio. So
Okay.
you may have a little bit more debt than you would be able to go conventional. So a higher debt to income ratio, a lower down payment option for the most part. It's usually 3.5%. VA is for any of our veterans, retired or active military, 100% financing. And also USDA is 100% financing for rural areas. So if you kind of are looking on those outskirts of a city limit, USDA could be very well like a great program for you.
Yeah, it's not real hard to get real rural here in South
Not
Carolina.
hard at all. You might just have an extra 5-minute commute into work. So, yeah.
Which can be a great thing.
Absolutely. It's a great option for a first-time home buyer.
Yeah, and you brought up the VA loan. I mean, South Carolina is a wonderful place for veterans to live because of
Absolutely.
the tax breaks that they get on property here in the state. I don't think a lot of them are aware of it.
Yeah, it's such a great program that if you have benefits through the VA, you should absolutely look at that being one of your options. Even if you can go conventional. Honestly, we won't get into rates, but typically rates are going to be a little less with a VA loan.
Yeah. Interest rates are a huge topic of,
Sure.
conversation everywhere we go because, money's been really cheap the last couple of years.
Absolutely.
And it's kind of
Yeah.
like, a drug. People are addicted to it. And now that interest rates are creeping back up, people assume that it's going to put a brake on the home buying, but we're still pretty historically low in the rate range, correct?
Yeah, for the last 30 years, yesterday I looked at it, for the past 30 years, the average rate has been 8%.
Wow. So we're still under that.
We're still technically.
We're still below
as of
average.
today, we're hovering somewhere for like a 30-year fixed rate, somewhere between about 5 to 5.5%.
Okay.
So we're absolutely below that. I mean, think about when our parents purchased homes. I mean, you hear them talk about a 10% interest rate.
Or above.
Or more, yeah, absolutely. Or that 100% interest rate on paying your rent every month.
Yeah.
So it's not too bad.
Yeah.
So what do you look for when determining what a specific buyer can afford?
So I like to ask the question, like, what is your comfortable max mortgage payment that you feel comfortable with? Because you may be able to afford X amount on paper, but that payment may not be comfortable making it every single month for 30 years. So usually like to start with what's kind of your max comfortable payment, and then work from there. But when it comes to financing, there is the down payment. Usually there's a minimum required, but you can choose to put down as much as you'd like. But usually financing, it's somewhere between 95% of the loan is typically what's financed.
Well, and that's a smart question because, homeowners have not just the mortgage payment related
Yes.
to living in a home. Things break or things need to be, redone or refreshed, and people need to budget for those things as well.
Absolutely. So let's say you have that 20% saved up. That doesn't necessarily mean that you should put that down as your full down payment. We look at borrowers' situations sometimes and say, hey, if you only put 15% down, you may carry what they call the private mortgage insurance, which may amount to $50 a month. But you can move into this house, have that additional cash sitting in your checking account, and be able to make those repairs or have it as your nest egg in case something unexpected comes up.
Yeah. So you brought up talking about a time on the mortgage as being a 30-year fixed. Is 30 years the only kind of mortgage you can get?
Not at all. We can do it's very customizable, but 30-year, 15-year, 10-year, 20-year, absolutely, all of those are options. It's just 30-year typically gives you a lower payment. It's most often a fixed rate, and it just typically makes the most sense for a borrower.
So what would be the advantage of using like a 15-year versus a 30-year?
You're paying off that mortgage faster.
Okay.
But I do like to say I'm an advocate for those shorter terms. But you could do a 30-year term and not be committed to making that 15-year payment, but still make that 15-year payment and still pay off your mortgage just as fast. So kind of different ways to kind of pay it off, but yes, absolutely.
Okay.
Yes, ma'am. So once a buyer has an offer accepted, what do you do once the offer is accepted to get the mortgage up and going?
So at this point, we've usually already had the application, and we've talked about like what loan programs will most likely fit them and their situation. But when we go under contract, it might change it a little bit. Just maybe you decided to go with a condo that has HOA fees or whatever way. But from there, what we're going to do is we're going to send out loan disclosures, all that information, gather any other documents we may need from the borrower, order the appraisal, put it into underwriting, and then we just kind of wait until we get closer to that closing date. And of course, we're going to request a few more items from the borrower. It's never a one and done request. But that's pretty much it. Just keeping everything on track and doing whatever makes that underwriter happy so we can get cleared to close.
Yes, ma'am. Yeah. So part of this process you mentioned is the appraisal process, right?
Yes.
So explain what that is and why that's important.
Oh gosh, especially in today's market with the values just being kind of higher than we've seen in a long time. Appraisal is used to determine the value of the property.
Right.
So you send out an appraiser, they're going to go out there, they're going to look at other homes in the area that have sold that are very similar, and they're going to come or determine a value for your home, and that is, as a lender, the value that we're going to use for the loan.
Yeah, so there have been times where we've been working on helping people buy properties, and that appraisal has come back with a number that didn't quite match what the sales contract said. And so what are options for that buyer when that happens?
There's a few different options. Ideally, you could look at putting less down to try to make up for that difference. You and your agent could go back and negotiate with the seller and see if they would possibly kind of meet you in the middle or with the purchase price.
So it's not a dead end.
No, it's not a dead end at all. It's just, it's just another hoop to kind of jump through, and then we'll just kind of go from there on what we can do to make it work.
Yeah, because if George and I have done our job, right, hopefully working with you first, knowing where they can afford to buy, that's not going to happen. Because this is an emotional purchase, and it seems like, as we're working, taking these people down the road, you get it as well. Yeah. People get caught up in the emotional piece of it because this is going to be their home, and they get invested in starting to live there.
They know where the Christmas tree is going to be.
Yes.
Yeah.
And they've placed the furniture and the pictures, and so little bumps like this, bring out the emotion, and so.
The good news is you'll have professionals behind you, like you guys, myself, and we'll figure out a plan and we'll get through it. But it's not uncommon right now.
Yes,
for sure.
So the contract's in place and the property appraises, but the home buyer's a little bit concerned about the interest rates because they have risen over the past few months. Is there a way they're able to lock the interest rate in place that you offer, and what are the benefits of doing that?
Yes, so they can absolutely, once they go under contract, we can go ahead and lock in that rate. In today's rising rate environment, it's very smart to go ahead and not float and not lock in that rate. So I would lock it in as soon as possible to where you don't have to worry about the rates going up, because I think the Fed's made it clear that will happen. So as soon as you go under contract, it's very smart to try to lock in that rate as soon as possible. And honestly, shop around. Don't feel guilty calling around and getting, rate quotes and stuff. This is going to be one of the largest purchases you're ever going to make, and you're going to be married to it for 30 years unless you sell it or you refinance it. So absolutely, see what makes best sense for you. And rates are going to be about the same pretty much anywhere you call, but it never hurts. Like to throw that out there.
Good. So where we left off, it brings me back to the topic of something that nobody likes to talk about, really, and that's their credit score, because that seems to be, the number that everybody feels most judged by. So what can you tell us about that credit score and what role it plays in this process?
Credit score seems to be, right when you're asking someone their permission to pull their credit, you can just see the dread, or you can hear the dread over the phone sometimes. So one thing I'll say, first and foremost, you need to talk. The reason why I say first and go to a mortgage lender at first, very first point of contact. Get your credit pulled so that you can see where you are. We can see if there are items on there that we need to work on, or if everything's great, we'll write the pre-qual letter and you'll go shopping tomorrow. But when you're looking at your Credit Karma app or your Experian app, that is a Vantage score, and that's not very accurate. So you have to talk to a mortgage lender originator, have them pull your FICO scores, which is your TransUnion, Experian, and Equifax. We're going to work off the middle score, but we need to see what's on there. We need to see what debt you owe, where your credit score is, and guys, in a year, even if your credit's just not where it should be, within a year, you could probably still purchase a home. We can absolutely kind of guide you. We have these simulators we pull, and it'll show, hey, let's pay this off or not pay this off. Another thing why it's so important to talk to someone who's a professional and can tell you a little bit about the credit is when borrowers take this on themselves and they see, like, I've got a medical collection for $200, and they take their money and they go and pay it off, it's probably not going to change your credit. You've already been hit for it. So don't waste money on, paying off a collection that maybe doesn't even need to be paid off.
Okay.
You could use it to pay down that credit card and really affect your score. So, yeah.
Yes.
Definitely important to
We've run into a situation where we're getting ready to close on a home and found out there was a $50,000 lien on the home that expired the day before the closing.
Oh.
And this was a 10-year debt.
That's some good juju on your side.
Jeez. Good thing good thing it wasn't my buyer's debt, it was the seller's debt.
Sure,
But still,
yeah, can throw a wrench into it.
Yeah, I guess he got some good advice of just don't pay it.
Yeah, wait until we have that closing date, the day right after.
This is the magic 10-year number.
Yes.
So, yeah.
Is bad credit the biggest problem you see people run into when trying to get a mortgage?
Not
Or
at
what would
all.
you say the biggest problem or hurdle ends up being when getting a mortgage?
It's a whole full picture. So if you have bad credit, but yet you have really strong income and you have money in the bank that we can use for closing costs and reserves even, just meaning money you have left over after closing cost, it's the full picture. So if you have bad credit, there are programs that, can get your approval as low as 570. It's the full picture, but truly, if you do have credit that's just not quite where it should be, get it pulled. Let's see what we need to work on, and we'll go from there.
Yeah. So you talk about closing costs, and a lot of times people don't realize that it costs you a little bit of money to borrow
Sure.
money, and you've got to. So what are some of the things that people are buying or paying for when they talk about closing costs?
So closing costs obviously include your down payment, however much you're putting down, as well as attorney fees, appraisal cost, just the title kind of goes into attorney, but just the cost of doing the loan, who's paying the underwriter, all that stuff. So you have the lender's fees, you have the attorney's fees, and you have like the cost of doing the loan, the appraisal and whatnot, as well as your down payment. So you're looking somewhere at about $5,000 to $6,000 realistically in closing cost. We're not necessarily in the market where we have seller paid concessions any longer, where the seller's really helping you out with that, but we may get back into the market the next year or two, and we'll see that. But just know those closing costs and your down payment, a lot of programs allow for you to have gifted funds from a family member, seller paid closing cost, pulling from 401k. There's just a mix of ways. You don't have to have that money in your checking account today.
Okay.
Is there ever a time where you just see as the mortgage broker, I don't think this person is going to be able to close, and you suggest to them renting for a little while instead of buying?
Sure, yeah. You may not be, today may not be the day we can pre-qualify you, but if we have a clear plan in place as to what we need to work on and what we need to do to get you to where we can pre-approve you, it may be where your lease is up next month and we need to probably tell you to renew that lease and stay in there for a little longer. It's not ideal, but I mean, it is what it is, and the goal is to get you in that home, and we're gonna get a plan together to meet that.
Yeah. So let's take this one step further, right? So we've put a first-time home buyer in a house, and they've done well over 5 or 6 years, and then they've started a family, and they're like, I want a condo down at the beach, and it's gonna be my second residence. And so they call you back and they say, hey, Candice, we're ready to do this. What does that process look like? Because I'm assuming you can still get a mortgage on a second location that's not your primary. So what does that look like?
So with a second home, if you're just going to be using it for yourself and not taking on like any rental income as an investment, it usually has to be within 50-mile radius of where you're currently living. But just know that the cost for your primary residence is going to be added into your debt to income ratio, as well as the mortgage payment for that second home. Typically for a second home, you have to put up a little bit more money down, but it's about the same process of buying that primary residence. Second homes do have a higher tax rate, so that is another thing that we have to take into consideration, that it's going to kind of push your debt to income ratios a little bit higher because you're being charged at that 6% rate versus 4%.
What if my intent is to use this home but also rent it out? How does that change up the mix a little bit?
Kind of same situation with the second home. You're probably going to have to put a little bit more down, but if you don't have a buyer or a renter already in place, then we can just go ahead and assume what your rent will be off that property, and then we can kind of sometimes use that for qualifying. But yeah, same situation.
So if I go down to the beach and look at a home that's got a rental history, we can show that to you, and that becomes part of the mix of what I can look at purchasing, as well as what you're going to be looking at possibly charging someone for rent. Awesome.
I don't have anything else, do you?
Well, what have we missed? Talking to you about mortgages.
No, guys, I just want to say the main misconception a lot of people have is you have to have that 20% down and you have to have perfect credit, and neither of those are true. So just kind of call someone that you can trust. Call David, call George. They'll refer you to a really good loan officer, and then you can start there and kind of have that conversation and see how much you can afford, so you can go out there and buy that dream house.
Awesome. Well, as real estate agents, we have to understand kind of like where the boundaries of our knowledge stops.
Sure.
And so it's always great to have people like you in our pocket and refer people to help them along and demystify this process. Because you've been a part of the first time home buyer workshops that we've been doing, and you've seen the questions that people ask, and there is a lot of misinformation out there about this process and what it looks like, and a lot of times we have to work very hard at keeping the emotions out of it so that it just flows and we can get people into homes.
Absolutely.
I think we kind of take for advantage common knowledge too. And I think that's what the first time home buyer workshop really promotes and helps us understand, is that we think people have a base level of knowledge on a topic, when in reality it's a lot lower than what we're envisioning. So it's giving them the opportunity to really learn the basics.
Absolutely. You don't know what you don't know, and so when you come to these workshops or you listen to these podcasts, it stirs up more questions. So and there's nothing wrong with having those questions. In fact, if you're a first-time home buyer and you're not picking my brain and asking me at least 25 questions, I'm thinking something's wrong. Like, you would typically have a question about everything, and that's perfectly fine.
So we'll put our contact information here at the end of the show, so if people want to reach out to you or to us, they can please do that, because the average 20% of the market right now, or so we're told, is first time home buyers, and that's 1 in 5. That's not insignificant. And I think some of those person's trepidation of getting into this market too is the average age of a real estate agent is my age. And they don't realize that there are younger folks like George, and that's why we're working as a team to make it more comfortable and bring people like you that are younger in your industry, so that young people feel comfortable doing this and they don't feel like they're dealing with their dad or somebody like that.
I'm so thankful you just threw me in the young category, David. So thank you, I'll take that. But anything, I would be honored to work with anyone who has questions, or at least be hopefully just contact to ask questions.
Awesome.
Yes, thank you guys.
Thank you for joining us today, and thank you for being a part of this startup of us doing this. And this has all come out of our first time home buyers workshop. We're blaming Dalvin back there. We keep blaming him every episode going today. It's his fault.
It's that way in case it goes down. We have
we got our scapegoat.
But if it goes well, he gets all the credit.
That's right.
But no, thank you for everything, and we'll, like I said, make sure people know how to get in touch with you if they
Thank
have
you
any
guys
more
for having me.
questions. So,
Appreciate it.
Thank you very much.
Yes.
Thank you.